Hello and welcome to this tutorial of understanding the profit and loss financial statement. My name is Irene. Many years ago, I saw a post on a wall saying, "To teach is to touch a life forever." That became my philosophy as a trainer. Therefore, I am delighted to be on a part of this journey with you and be able to transfer some of my knowledge to you. So let's stop thinking and start doing. During this tutorial, I'm going to be introducing you to the income statement. The income statement shows how your business revenue translates into net income. This is why income statements are also known as profit and loss statements. They show how much revenue you intend to bring in. So stay with me and I'm going to be explaining the concept of an income statement. The income statement looks at revenues, expenses over a period of a month, a quarter, or a year. The income statement also shows how your business revenue translates into net income. This is why income statements are also known as profit and loss statements. They show how much revenue you intend to bring in. But before I show you how to build an income statement, we need to learn a few terms. So let's begin by defining revenues, expenses, and net profit. Revenues is the money generated by a business from its sale of products or services. Expenses, an expense in accounting, is the money spent or cost incurred by a business. And net profit represents the money you have left after expenses are paid. The last three terms to define are depreciation, which is the estimated useful life of your fixed assets. The cost of goods sold, which means how much we spend on making a product. And your fixed assets, which is what your company owns, resources such as computers, equipment, vehicles. Expenses. This is split into two categories, the selling and the administrative expenses. Selling expenses relates directly to making sales, and administrative expenses has to do with the general overall admin of the business. Let's go into a few examples on my next slide. Examples of selling expenses. Selling expenses incurred only by the sales department. The rent, the commissions, the advertising, the travel, utilities, and so on. Remember, this has to do only with the selling department. We are going to go into the admin expenses and a few examples next. The administrative expenses. These are costs that your business has to cover regardless of how many products you make. Example: salaries, utilities, office supplies, postage, telephone costs. Remember, this has to do only with the admin expenses. The cost of goods sold, known as COGS. That has to do with how much we spend on making a product. Yes, this is an expense, but it relates to a direct expense related to the production of products. How much did you spend making that product? For example, the labor, the materials, the manufacturing expenses you accumulate to create a product. I am going to show you how to calculate this later on. Depreciation cost is another expense. That has to do with the estimated useful life of your fixed assets. Yes, this is an expense, but there is an equation to calculate the depreciation cost. It is the cost of fixed assets minus the salvage price divided by the useful life. I will be showing you later on an example of how to calculate the depreciation cost. This brings us to the cost of goods sold expense. Let's build a scenario, building a widget. Component A cost us $50. Component B cost us $50. Component C cost us $100. Clamps, screws, and mishmash $2. The total materials for one unit we calculated to be $202. The depreciation cost expense example. Remember the equation, cost of fixed asset minus salvage value divided by the useful life. We bought a truck for $50,000. We minus $5,000, which is the selling salvage price after 10 years. Therefore, the depreciation cost for 10 years is $45,000. Our depreciation expense is $4,500, which is $45,000 divided by the 10 years. Now, to build the income statement, you need to know how to calculate the cost of goods sold, the depreciation cost. You now know what is revenue, what is expenses, the two categories, and net profit. The net profit equation is revenues less expenses equals net profit. So let's have a go and build a profit and loss. Now we come to the income statement, a completed income statement. You can see the terms we use, the sales, the cost of goods sold, which includes material, labors, and the overhead, the operating expenses, two categories, selling and administrative, and there you go, there's the depreciation expenses. Now, this has a net income of $19,695, but it can also be a net loss.